Nearly 40% of landlords are thinking about selling in 2025. That's 3 times more than last year. So, why is that? Well, the UK property market is about to face major rental reforms, which is supposedly why landlords are so worried in 2025. But I've been in this industry for over 10 years and I'm in regular contact with landlords, investors, and institutional developers. And I can tell you, there's more to this than meets the eye. So in this video, I'm going to explain all the big changes that are happening in the UK property market right now and what these changes mean for investors. If you take the news headlines at face value, you can see that lots of landlords are leaving the market. But this mass exodus didn't start in 2024, as most people think. It started way earlier than that. In this report by Hamptons, you can see that during the first half of 2024, only 10% of homes that changed hands in the UK were bought by landlords. That was the lowest number since records began in 2010, with a steep decline compared to previous years. But this wasn't a one-off event. Between 2019 and the end of 2023, there were 163,000 fewer properties on the UK rental market because landlords had been selling more homes than they'd been buying. In other words, the overall supply was shrinking. Fewer landlords meant fewer properties available for tenants, which put even more pressure on an already stretched market. So clearly, it's not just in 2024 that landlords started quitting. It's been happening for quite some time, long before the rental reforms were even on the cards. So what's been brewing under the surface for all these years, making landlords leave the market? Well, there are 3 key factors behind this mass exodus we're seeing right now. Coming into 2022, mortgage rates were sitting comfortably around 2%, and landlords were making some solid profits. But we all know good times don't last forever. So neither did the interest rates. Fast forward to 2023, the rate started climbing up. And before you could blink, they hit an average of more than 5%, with some investors stuck paying 7%, 8% or more. And in moments like this, when mortgage costs outweigh profits and the numbers just don't add up anymore, it becomes harder for landlords to justify holding onto their properties. But surely, rising mortgages alone shouldn't be enough to tip long-time landlords into a loss. After all, they bought when prices were lower, so they shouldn't have huge mortgages relative to the value of their properties. Well, some landlords kept borrowing more as their property value went up, meaning they did end up with big mortgages. Many had been lax about increasing rent, so the jump in mortgage costs hit them harder than it should have done. And then there's the big one, tax. Most landlords who've been in the game for a long time own their properties as individuals, not companies. And since 2016, when huge changes to tax laws for property were introduced that specifically targeted individual owners, that's resulted in far higher tax bills to go along with their lower profits. This doesn't have such an effect on people getting in today, who are able to choose a company structure from the start if that's the right move for them. But for those who've been around for a while, there's less of an incentive to invest in property and perhaps more of an incentive to sell up and invest in something else. And the third factor is, quite simply, age. In 2022, nearly 3/4 of landlord sales were driven by one thing: retirement. Buy-to-let mortgages have been around for over 25 years now, and many landlords who bought in their 40s are now hitting retirement age, whether they've been hit by rising costs or taxes, or simply feel it's time to move on. They're cashing out and walking away. So those are the 3 underlying factors to the supposed mass exodus. But why has this become such a big thing in 2025 specifically? Well, the best way for me to explain the issue is to bring it to life for you. So meet landlord Louise and tenant Terry. Terry has been renting Louise's flat for the past 3 years. He's always been quiet, reliable, and easy to deal with. However, last year, Terry lost his job and started falling behind on his rent. 1 month turned into 2, then 3, and Louise realised she needed to act. Now, in years gone by, it would have been possible for her to use something called Section 21, a so-called no-fault eviction, to remove Terry, regain control of her property, and find a new tenant. But soon, that won't be the case. Tenants will be able to stay indefinitely unless they choose to leave or landlords have a solid reason, like selling the property or serious rent arrears. Now, 3 months does count as serious, but because she can't claim no fault, Louise has to wait for a chance to prove the arrears to the court. And if there's one thing about the UK courts, speed and simplicity aren't their strong suits. So by the time the judgment is made and enforced, the arrears could easily reach 9 months or more. But that's not the only challenge that Louise will face in 2025. Let's say Terry actually got back on track and stayed in the property. But due to the rising mortgage, insurance, and tax costs, Louise decided to increase the rent slightly. Nothing extravagant, just enough to keep up with general rental inflation in her area. Well, under the new Renters' Rights Bill, this rent increase could be challenged. If a tenant feels the rent hike is unfair, they can take the case to a tribunal who will decide whether it's a justified market rent for the area. And now Louise is stuck in limbo. The tribunal process will be slow. There's no guarantee it will rule in her favour, and even if they do, the rent increase won't take effect until they've got around to considering her case. And all the while, Louise's costs are rising. So it's no wonder that 77% of landlords have raised concerns about these challenges, claiming that they could have negative effects on the private rental sector. However, there's a group of landlords who don't seem to be lobbying against any of these strict regulations. In fact, they are not only relaxed, but actually happy about these reforms. So who am I talking about? Think back to 2020, when Mark Zuckerberg advocated for tighter social media regulations. On the surface, it seemed like a move for user protection, but it was really about Facebook's ability to easily comply with new rules, making it harder for new, smaller competitors to emerge. And the same scenario is unfolding in the UK property market. The build-to-rent sector, dominated by corporate investors, is absolutely booming. In 2023, £4.5 billion was invested in this sector. And these big players are no longer just targeting city centres. They're moving into the suburbs and directly competing with private landlords, with 77% of 2024's investments going into single-family housing rather than city centre flats. Take Lloyds Bank, for example. Not only are they providing mortgages to landlords, they're also cutting out the middleman and partnering with developers to build and manage rental properties themselves. So while small landlords struggle with rising costs and tighter regulations, the corporates are moving in because they can deal with all the red tape and take a hit on short-term gains for long-term profit. Given all of these changes, is this the end of private landlords, or is there still a silver lining to all of this? Well, from everything we've talked about so far, it's undeniable that buy-to-let is getting tougher. But does that make property a bad investment? Well, yes and no. The difference between 2025 and years gone by is that property is not just something that you can dabble in anymore. There are too many rules, regulations, and hassle to bother investing if you plan to just buy one property for a bit of extra monthly income. You've got to take it seriously, take a long-term view, manage your assets professionally, and you need to try to achieve some degree of scale. Eventually, if you can work your way up to 3 or 4 properties over the years, that's a sweet spot where I often see investors starting to find that all the upfront effort has become worthwhile. However, for people who do want to take it seriously, but are still doubting property as an asset class, all I will say is this. When Warren Buffett makes a $1 billion bet on a stock, investors tend to pay attention because the guy has a pretty solid track record of picking winners. So when I see the biggest companies in the world who have strong research teams whose sole purpose is to find good investments, and they've decided to bet big on UK property, so what are they seeing that your average Joe might not? Well, the UK population keeps growing, and if landlords keep bailing, we're in for even more of a supply and demand crisis than we had already. That means competition among tenants will drive rents even higher, just like last year's 9.1% rental growth, which is only going to keep going. On top of that, because lots of long-time landlords are selling up, there are properties coming onto the market that need a bit of TLC. So investors are in a great position to snap up better deals than ever. And the best part is, many of these homes come with tenants in situ, because not all landlords are the heartless type chucking people out on the street. And even if they were, they'd want the income while the sales process goes through. That means that you could start earning rental income from day one. So sure, the market's shifting, but if you're in the property game for the long run, 2025 could be an amazing year for you. However, as I said before, the laws and legislation is making all of this a lot harder. So you need to know exactly what you're doing. Otherwise, you could end up forking out thousands in fines and even having to refund your tenants the rent they've paid. So check out this video next, where I explain step by step how to buy and rent a property in 2025.